In market news now, Asian shares steadied after yesterday's sell-off, though investors remain wary about Federal Reserve Chair Jerome Powell signaling that policymakers will wait longer than previously anticipated to cut interest rates following a series of surprisingly high inflation readings. Despite comments from the Fed, European stocks are trading higher. U.S. stock index futures are up as most mega-cap growth stocks gained in pre-trading, while investors awaited earnings and commentary from the central bank's policymakers to gauge how corporate America is faring. In a short bit, we're going to get in a conversation with Patrick Matidi. However, I just want to come to the line that has actually kind of spooked markets a little bit. And this is markets now having to digest that perhaps the Federal Reserve might even have to push back rate cuts, not just September, but a little bit further on, or in some cases, probably not even cut interest rates. But the line here that was discussed when Fed Chair Jerome Powell was speaking at the Wilson Center's Washington Forum, Powell saying here, and I quote, "A lack of further progress so far this year on returning to our 2% inflation goal." And this is when he was reviewing the recent 2%, the recent data that we got out of the US. However, to give us perspective on some of the market dynamics and also how the market is interpreting those comments, we are joined by Patrick Matidi from Aluwani Capital. Patrick, thank you so much for your time. So let's talk market sentiment, because I think over the past couple of days, we've been paying attention to Fed speak. We're digesting comments from Fed Chair Jerome Powell from yesterday. How's the market sentiment so far?
Good afternoon, and thanks for having me. Indeed, sentiment is very challenged. I think we're dealing with a few factors all converging at once. So on the one hand, as you mentioned, we've got Fed speak, which essentially is the market trying to ascertain, when and by how much are we likely to get, the first cuts in interest rates this year. And then secondly, we've got the geopolitical tensions that are simmering with the potential for some spillover. And then domestically also, the markets are also trying to, digest the different permutations that are being put forward by some of our colleagues on the political side with regards to the upcoming electoral outcome. And obviously, we still have other, infrastructure challenges and what do those mean for the economy going forward, more especially around, the water provision and water security. So there's quite a bit on the go, both domestically and also globally. That is putting a dampener on sentiment of the markets.
With that said, then, where are your rate cut calls sitting so far? I mean, given the data we've gotten out of the US, data out of South Africa, where are you sitting when it comes to calling these rate cuts?
I think the easier one is probably our own MPC. So we've always been of the view, going into this year, that it is unlikely for the Reserve Bank to cut, very close to elections, which was, the first half of this year. So we've always been looking for the second half, for the first rate cut to come through, from the MPC. So that view has not changed, so we are still on track on that front. I think on the offshore side, that's where things are a little bit muddled. So if you look at late last year, early this year, the markets were looking for the first cut to have been in March, and then that shifted to May. And now recently it would appear, July, September is where the markets are starting to price in a rate cut. But I think importantly, though, is that, the quantum of the rate cut, it would appear we are now looking for what we call a shallow rate cutting cycle, meaning that, we're not looking for as many as previously. And also the quantum in terms of 25 basis points versus 50, the markets are now comfortable with at least 25 basis points before we can become a lot more positive to look at further cuts. And that outlook will largely be driven by the inflation outlook, which is key, at least from a Fed point of view.
I want to talk about gold for a little bit. I mean, I've had analysts come on the show, talk about gold and then say to me that it's, the rally is as a result of central bank buying. But are you finding it difficult to explain to clients or to yourself why gold is moving the way that it is, given where real inflation is sitting at and interest rates?
Look, gold has always been a difficult one to explain because it's not a typical asset that has got yield. And it's also not an asset that can be used, in financial market terms in the real world. So it is largely seen as a store of value. It tends to move largely driven by sentiment, as a result of some other trigger elsewhere in the world. And of late, clearly, the geopolitical tensions have also had a bit of a positive contribution to the gold price. But I think if you look at it holistically, I think there are a few factors that are currently supporting gold. So yes, we have seen a lot of central bank buying, especially China. And also on the Chinese consumer side, we're seeing the demand for gold also picking up, just given what those markets have done in the last year or so in terms of the retail side of the market, where guys have lost quite a bit of money. So there is a bit of flight to quality, at least driven by China, both the central bankers and also the retail market. And I think also, with a higher for longer inflation outlook, which is what we seem to be having to contend with, gold from a stock of value point of view becomes a bit more attractive, right? So, and also, if you are expecting the dollar to collapse as a result of our rate cuts, then also, that is supportive of gold. So I think there are a few factors that are supporting gold, and you can't dissect one and say this is the main driver. But I think currently, you do have quite a nice concoction of factors that are providing a nice tailwind to the gold.
All right, Patrick, let's leave it there. Thank you so much for your time. That is Patrick Matidi. And on the back of his comments about where gold is and currently trading 0.4% higher, just over $2,300. And Brent crude remaining unchanged at $89.59 a barrel.